Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So on the weekly report we have put the foundation now a view on the euro currency, and mostly we have spent time on discussion of the fundamental background, which is currently stands weak with the euro currency. It's mostly because of the lockdown, new stage of the lockdown in Europe, problems with the AstraZeneca vaccine, tensions with the export of this vaccine to Great Britain. So it's a lot of moments stands around the pandemic that makes impact on the term of the European economy recovery. So actually that's the major concern. And all this stuff put the shadow on the perspective of the euro currency, at least in the short term. That was the reason why we think that euro currency is bearish in the short term. And mostly we are focused on the 116 area that probably should be reached within the couple of weeks, probably, maybe faster. Now our strategy suggests considering selling the rallies. If we will get any on the market, we could consider taking the short position on any moderate retracement that we could get until market hasn't reached the 116. Around 116, we think that we could consider taking the long position, because this will be a strong weekly support where the very significant upward action could start, especially in the background of the potential head and shoulders pattern that we have on the weekly chart. So that's shortly things that we consider currently on the euro. And on the intraday charts, we talked on the butterfly and we said if we would get lucky, we probably could get the pullback up from here to the one of two levels. The first level we thought could be 1820. It's right here. Next is a confluence around 1865 at 1870. This next area that could be watched for possible taking the short position, depending on what the pullback will happen here. So our suggestion that we made in the weekend, the market probably should show another drop before any retracement will start, if of course it will start at all, because market currently is not at the overbought. It has broken strong, not at the oversold, of course. It has broken through major weekly support. On the daily chart, it also not at the oversold. It has free space to go down, and theoretically it could happen that we just get downside continuation without any retracements. But if we will get lucky, and we hopefully will get the pullback, that's the levels that we'll keep an eye on for possible taking the short position. Currently, as you can see, indeed, this drop has happened. Market hits the 1618.1740 target of the butterfly, and potentially it could show the upward direction, because here, as you can see, visible slowdown of the downward direction, no acceleration. So indeed some pullback maybe will happen here. Market is also could form potentially the bullish grabber, although this is the weaker type of the grabber, but well, maybe it will work. Currently market already has tested the MACD predictor line. So on the 4-hour time frame chart, another picture that we also discussed, this is potential double repo buy pattern. So currently you could see it for us down, close above the 3x3, close below and creating the new lows. And if we will see sharp upward reversal in the shape of the bullish engulfing or something of that sort, closing above the 3x3, that might be the confirmation of the double repo buy. If you will drop your time frame more, you will see, and here market is forming the minor butterfly, so with the 1618 extension target, so you could just keep an eye on it. Right here, just a few pips stands to the 1618. And also, as bullish divergence is growing in the lower time frames on the 15-minute chart and 30-minute chart in particular. So here, if you're a scalp trader, we said that you could keep an eye on this setup as well. Actually, market is coming to the moment when you have to make the decision. You could few options. First of all, you could try to take more risk and trying to buy right at the 1618 extension, then control the appearing of the double repo, moving stops to the break-even. You could do nothing and wait when the double repo will be confirmed. So in the case of this upward action, close above the 3x3, you could try to take the long position with the stops below the lows. That's few options that you could consider for possible taking the long position. The attractive moment in all this stuff stands in a low risk, because market has to show reaction right from here, or it will just collapse. So it's not necessary to hide the stops too far behind some far extended fib levels. Everything should happen right here. So the target has been hit, some grabber might be formed, market is forming reversal patterns on the lower time frames, so its stop will be just somewhere below this area. So market will either turn up right from here, or it will not be turning anyway at all, and market will just go down. So that's few moments that we could keep an eye on today. So daily traders do nothing, wait for a pullback and watching for resistance levels for taking the short position. Scalp traders could consider possible double repo pattern with the upward retracement. Double repo itself has the target around 1843, 1840, 50% level of the whole downside action. So that's actually what we have in the euro.